Gold and silver jumping to all-time highs as escalating geopolitical tensions boost the historic rally. Bloomberg's Tatiana Darie joins us now. Tatiana, let's end with the question we heard from Cameron Dawson earlier this week. I think the question is, how much can it continue? Can this rally continue?
Well, we have to ask ourselves if the macro conditions and sort of the catalysts that are playing into this rally will continue, and consensus think that they will. For example, the structural bid from central banks, that is expected to persist for years to come as they want to diversify away from dollar assets into gold. And if you look at geopolitical fractions, we keep seeing more of that, right? You have Venezuela, you keep an eye on that one because you cannot rule the risk of boots on the ground there. You see more militancy escalating now in Nigeria. So geopolitics is reviving that premium yet again. But beyond that, you also have concern about Fed independence going into next year. Let's not forget about the Supreme Court tariff decision, which could really upend bonds and rekindle that risk premium if fiscal concerns return, if the administration is forced to issue refunds. So a lot of the catalysts are in place. And if you look at the white metals, they've just recently been added to the critical minerals list, which opens the threat of tariffs going into next year. So these are sort of the big tailwinds that the market has. But of course, we cannot discount the risk of reacceleration in the economy with the Trump administration pushing that tax bill and those provisions kicking in into the next year.
And a reacceleration in the economy would be good news for the industrial metals like platinum, like silver, like copper as well. How are you thinking about the demand that's coming in from ETFs? Because that was a big driver, at least for gold.
Yeah, exactly. For gold, and now they've actually spiked for the rest. So what is being less appreciated or less talked about is that the ETF crowd has also piled in on this trade. And in gold's specific case, ETFs have actually bought more than central banks by some estimates. I only say that because we don't have full visibility into the central bank action. But if you look at the data that we have available, those ETF buyers have bought more than central banks, and they've returned to this market for the first time in the last 5 years. So if you look at the history, that's poised to continue. That's poised to offer another tailwind. But it also leaves this market at risk of just severe crashes when it all reverses, right? ETF buyers and just retail traders can get easily scared by an unwind in this trade. So if you play that trade, you have to be aware that there could be some outsized move on the downside, as we've already seen on Wednesday. I mean, palladium crashed more than 4 standard deviations. That will stress your risk management.